It's a $7 trillion. Yeah, traded on a daily basis. Okay. Thank you. Thank you, Gertrude. So, as you've mentioned, we started the web series last week, and we did the introduction, the definition, or rather the uncommon definition of what forex trading is. We also looked at the major pitfalls or the misconception that Kenyans do have. After that, we also looked at the frequently asked questions, and last time we focused on frequently asked questions that were knowledge-based related. So that's what we looked at. So today we are building onto that, and I'll also be answering additional questions. Last time I requested that I will talk about brokers. I'll mention about brokers as we make progress. So just for confirmation, I wanted to confirm that my screen is visible.
Yes, it is. Yes, it is. Maybe we can fit the whole screen.
Okay, let me. Is it better now?
It is. Yes, that's better.
Okay. So this is just basic introduction. These are my social media handles. It's Afro Swing FX across major social media platforms. In the way of just introduction, I know there's somebody possibly who is joining us for the first time. My experience starts from 2014, and I work with the following brokers: BD Swiss, Windsor Brokers, HFM, and Ingot Brokers. I'm a swing trader, and I trade supply and demand, and I operate the Afro Swing FX brand name. This is just basic introduction to those guys who are joining us the first time. So also I'll give a disclaimer that these are my original thoughts based on my experience strictly. You may or may not agree with what I am saying, so I just need to issue the disclaimer right from the word go. These are my thoughts based on my experience. So last time we discussed, and as part of the web series content, we developed a content script, and I was asking myself, if I was to start over, what would I do differently, and where would I start? I'll keep making reference to what we shared last time. I would spend a lot of my time in research and assessing, number one, who is successful legitimately, and also get to understand what it takes. And why I'm saying you need to research and understand who is legitimate, both locally and internationally, is because if you go to social media, you will see very many posts of people posting what looks like forex. People will post money. People will post profits. And if you have a conversation with them, you'll find that things tend to become a bit shady. They either want to sell a robot to you, they either want to sell an indicator, or they will tell you, bring your money, I will trade for you. So get to understand who is legitimate. And the person who is legitimate focuses more on the process and not the outcome. So if you find somebody who is interested in going through the process, they show you how they analyze their charts, they show you the pitfalls, the misconceptions, they're interested in the process, that is the person you'd rather look for. So why would I do this research? I need to get the right expectations. Remember, I mentioned in the first video that you cannot come into this industry and expect that you're going to make multi-millions within the first month or the first week or the first year. It doesn't work like that. You need to set the right expectations. And also, let me share, because I do copy trading, and the investors who ask a lot of questions, they keep asking, how much can I make in a month? How much can I make in a year? I know a guy who can make 2 times what you are making. So people tend to have varying expectations. So One of the reasons why you want to research is to have the right expectations. Sit with this person who you've deemed to be legitimate. Get the right expectations. How long does it take to learn the skill? And do not go to ask them with preconceived mindsets, preconceived answers. You want to take 6 months, you want to take 1 year. No, it's them to tell you how long it will take. The first thing you also need to ask yourself is, how long do I see myself trading? And it's something people don't ask. And today, just test this. Go out there, ask people if they're interested in forex trading. Many will raise their hands or many will show interest, but ask them, how long do you see yourself trading in the future? And my answer would be, if you see yourself trading for the next 10, 15, 20 years, if you see yourself trading for decades moving on, then you should not look to get lessons or knowledge that takes about a week or a month. And I want to give a very good example. If you're interested in building a skyscraper, the foundation you will lay for that skyscraper is very different from a basic mansion. So that's why I keep asking, how many years do you see yourself trading? And even if you take my course, that's a question I'll ask you. And if you do not have a right answer that works for you, we actually tend not to move forward with the lesson until you sit and ask yourself that question. How long do I see myself doing this? Oftentimes people will tell you maybe 2 to 3 years. So the question is, after 3 years, what will you do? So again, right expectations. And then you also need to understand, how much capital will I require to start with. So this forms part of the expectations, the time taken, the years you see yourself trading, and how much capital you require. Why am I saying this? Don't get into this industry thinking you're going to put $100 today and you're going to get $100 tomorrow. As I mentioned in the first video, this is a business, and it's a wealth creation business, not an income generation business. So, ladies and gentlemen, this is for a fact. People pursue financial freedom world over. Everybody wants to be financially free. We all want to be financially free. Maybe by a certain age, I want to be free to travel the world, to buy my family what they want, to live a life that I desire. But the problem with pursuing financial freedom is that very few people get to the top. And I think if you study wealth, you realize that 3% of the world controls 97% of the world's resources. It's an imbalance. And one of the reasons it's an imbalance is 7% of the world, we like what is easy and convenient. And I keep repeating, we always look for things that are easy and convenient. Same thing with forex trading. If we start 10 of us, by the time we're crossing the 3-month threshold, 9 of us will have quit or they have lost capital. They keep blaming the process. So you have to be willing to submit yourself to this process of learning consistently. Majority of us fail because we feel it takes too long to learn, or we feel it's too expensive to learn. We want to be successful on our own terms. And I'll keep reminding you, 3% of the world controls 97% of the wealth. And they only do that because they submit themselves to the process consistently. They don't look for shortcuts. They don't look for easy way of making money. So some of the best, and I mean these are the best traders and the best teachers I can recommend. And you'll see there is no Kenyan on this list because I do not want to use this opportunity to blow my own horn. You will take your time to find out who I am. So some of the best that I recommend, we're seeing number one is Photon Trading. They're based in the UK. Number two is Phantom Trading, based in the UK. Vertex Investing, based in the UK. And then there's one that is, let me say, regionally based, Intelligence FX, based in Tanzania. Why would I recommend these guys? These people have put in more than 5 years of experience into building these brands. They didn't start yesterday, they didn't start last year. They have put in more than 5 to 10 years experience to build these names that you're reading on my screen. So if you consume content from them, you're consuming mature content that will improve you as a trader. The reason why Photon Trading number one is my top recommendation is that he has simplified a lot of things. So number 2 and 3, they tend to be a bit technical, but number one is the very, very best I can recommend. But as I'm recommending this, ladies and gentlemen, there's nothing for free here. Definitely you will pay for that lesson. And I want us to normalize spending money to learn. I sit with sit sometimes with wealthy people and they tell me welfare will not get you to the top. It's painful to hear that, but you must accept this. There is no top person in any industry. Top doctor, top lawyer, top trader, top whatever in any industry. They did not get to the top through welfare. And welfare is receiving free things. They didn't get there. And I know as a country and as a people, sometimes we like receiving free things, but I must convince you not to go for these things. Free things will never get you to the top of any industry. So if you'd like to be trained by these guys, just know it will cost you. I repeat, I am not on this list because I don't want to blow my own trumpet. I want you to take time to get to know who I am before you consume my content. So there's a question I received. People are asking which is more sustainable for a beginner. Is it scalper, day trader, swing trader, types of traders? So I'll start by defining the types of traders. So we have what we call a scalper. And this type of trader seeks to profit from the smallest price movements. And they do this by making very many trades, very many large trades with the aim of maximizing profits. So if the price of the dollar goes from right now we are at 140, let's say it goes from 140 to 145, they just want to make that 5 Kenya shillings profit and they walk away. So for them to maximize profits, they will trade 10, 20, 30, even 40 contracts in a day. So they try to maximize profits within the shortest time possible. I also must tell you, scalpers tend to lose a lot of money. Number 2 is a day trader, and this person, they want to make a trade between the time they wake up and the time they go to bed. That's the time frame they're trading with. They cannot go to bed with an open trade, so they trade within 2 strict time frames: when they wake up and when they go to bed. Now, the problem with this type of trader is that yesterday on Wednesday you might have made some profits. Today on Thursday you might lose the profits you made. Why? Because the market movements on day 1 are not the same as the movements on day 2. They are not the same movements on day 3. They will not be the same movements on a different month. So this type of trader is also considered very, very aggressive and very risky. And the reason why people, and let me say Kenyans because I've interacted with them, they prefer scalpers and day traders, is because they are brought into forex with the illusion of making money. You need to come into this industry, number 1, with the objective of learning, not even to make money first. Just learn. Just learn and understand what is going on in this industry. Number 2, your objective should be maximizing your risk, protecting your capital at all costs. It's not making money. Once you protect your capital, you can proceed to make money. So the next type of trader is a swing trader. I identify as a swing trader. And a swing trader is extremely, extremely conservative. Why are they conservative? They have understood that forex is a long-term game. So they seek to position themselves to benefit in the long term, not in the short term. And they only benefit in the long term by making sure they don't lose their capital in the short term. So how does a swing trader behave? Number 1, you'll find that they make very few trades. So a scalper can make even 10 trades at a go. A swing trader will only make 1 trade, just 1. But that 1 trade, the profits he or she will make from that 1 trade is equivalent to the 10 positions a scalper has taken. So ask yourself this: suppose you have opened a position, 1 position, and I have opened 10 positions on any trade. If both positions go in the direction you are expecting, both of us make money. But I want you to think of it this way: suppose those positions move in the opposite direction. A scalper will lose more money than a swing trader. That's how you should always look at forex trading. Before you enter a trade, you ask yourself, if this thing goes in the opposite direction, will I survive? Will my account survive? If the answer is no, then don't get into that trade or don't get into those many positions. So that's why I advocate for swing trading to be the most conservative and the safest way to trade. So we have another group of traders called position traders. Position traders, banks behave like position traders. Why? They have the financial muscle of buying a security or an instrument and holding it for years. They can buy Euro USD today and they can exit this position next year at a time like this. They have the financial muscle to stay within a trade. Why? You'll find that a trading division of a bank has billions of dollars to trade. So even if they enter 1 position, they've probably entered that position for, let's say, like 5 million USD, and they have a billion USD. That's like a fraction. They are able to sit in the markets for long. And position traders move the markets than swing traders. Position and swing traders, position traders and swing traders move the markets easier than day and swing traders. So these two are the most conservative and the most profitable type of traders there are on this planet. And you can take your time, just keep researching, you'll find out these guys endure over the long term. Now, there was a question that I received that what do I consider before choosing a broker? And here I want to take time, and I will purpose to be very frank and very honest with you. So we'll start by understanding that the job of a broker is to give you a platform that gives you access to the foreign exchange market. So they give you a platform, you log into their platform, you'll deposit money onto that platform. It's your account that you have, and you'll use your account to trade the differences in these instruments. And remember the first video we talked about contract for differences, CFDs. So they'll give you that platform to trade. All brokers are the same. Let me start by declaring all brokers are the same. It's just the name and the customer service that varies. So why do I want to take time to teach you this? First of all, let's share what is a spread. A spread is the difference between the buying price and the selling price. Today, if you go to the Nairobi Securities Exchange and you want to buy, let's say, shares of Safaricom, you'll find that if you log on to your account, for those who have accounts, you will see that the bid, which is the buying price, says, let's say, 13.5, and then ask, which is the selling price, is saying 13.6. So the difference between 13.5 and 13.6, that is what you call the spread. And that spread goes to the broker. So if you see a security quoted at bid, which is buy 110, and ask, which is sell 115, that 5 shillings difference is the spread that goes to the broker. So once you understand what a spread is, you also get to understand that for a broker to make money, they want you to trade frequently. They want you to move volumes. They only make money if you move volumes. If you don't trade frequently, they don't make as much money as they should. Okay? So just remember that spread, and remember that our broker always wants you to trade frequently and move volumes. That's what they want from you, because eventually they want to make money from you. They are not here to become your friend. They're here to make money from you. So there's something called swap. The swap is the cost of holding a security overnight. So let's say I buy oil, a contract for oil today. I'm seeing oil, US oil and UK oil are paying around 80 USD. And I hold this contract for 2 days. Swap is the cost of holding that contract for 2 days, or for holding over 1 week, or 1 month, or 1 year. It's usually a small fraction. So the swaps and the spreads is where brokers make money. So if they make money from you buying and selling, they would prefer if you traded frequently. In fact, they'll be very happy with you if you always trade on a daily basis. That's how they make money. No broker will tell you to trade small sizes. No broker will tell you not to trade every other day. They will tell you these things. So brokers claim to offer the best price. Today, if you Google, we have FX Pesa here, we have Score, we have HFM, we have Lingo, we have all these brokers in Kenya. And every broker on their website, they brag that they give the best spreads. And I've told you the spread is the difference between the buying and the selling price. You will quickly discover nobody offers you the best. They're offering more or less the same thing. You find that this one offers you maybe smaller spreads, but they charge you more swaps. This one offers you bigger spreads, they don't charge you swaps. They are always out there to make money. So don't ever believe that this broker offers you the best compared to the other brokers. Except customer service. Customer service is where you need to draw the line. So what are some of the ways that brokers entice you into opening an account with them? If you take time, just research, just Google the brokers in Kenya, just go to their website, just read through. Don't even commit to open an account, just read through. You will see something called a deposit bonus. Now, a deposit bonus works like this. They tell you for every X you deposit, we will give you Y for free. So for every $100, let's say you deposit, we will give you 50% extra. So automatically your mind thinks that if I deposit 100, I will get 50. So I'll have 150 in my account. But because you're looking to get the biggest bonus, you will deposit more money. Because truthfully, let's just reason. If I tell you I will give you 50%, why would you go to deposit $10 to get an extra 5? I mean, that won't even move your account. You'd rather deposit like 300 or 500 so that I can give you 250. So your account can read 750. Human beings love large numbers. So you will go get money to deposit the 500 for you to get the 250. But the fine print is where they will catch you. Number one, you've gotten the extra bonus. The extra bonus convinces you it's extra money. So when you go to the market, you tend to behave recklessly. And I am guilty, I've actually done that before. But the fine print tells you, and I've got through this. There's one broker called, let me not mention the name right now. They gave me a bonus. But within the fine print, they tell you, if your capital goes below a certain threshold, they withdraw their bonus. Most people don't get to know that. So I want you to imagine you've put $500 in your account. You have gotten, say, the 50% bonus. And the bonuses vary. Some can say they give you 50, some can give you 120%, some can give you, it varies. So I'm just using the 50% as part of this discussion. So you've put 500, you've gotten 250, your account is 750. But the fine print, they have told you, of which you didn't see, that if your account goes to 50% of your actual deposit, so if your account reads from 5, instead of reading 500 USD of your own money, it reads negative 250, they will withdraw their bonus. So suppose you've made a trade, things are not going very, very well, you haven't learned this industry very well, and your account is reading negative 350. So negative 350 from 750, you have $400. That's good protection. That's very, very good protection. Your account can survive the motions of the markets. But now imagine, and remember they told you they'll take away their bonus if your account goes below 50% of your actual deposit. So your account is reading negative 350. They have taken away their 250. So your account is reading negative 350 out of 500. Your protection all of a sudden has thinned from 400 USD to something else. That's how deposit bonus works. And they will use this to entice you to come into the market. What is the other way they use to entice you? You will see, and I can guarantee you, if you go to social media, you will see all local brokers claim to give you free trading lessons. I want to go back to this presentation. I told you you will pay for this. And I told you welfare will never get to the top of any industry. And if you can go ahead and test my theory, you're free to test it. So what happens when these brokers tell you they're giving you free trading lessons? I got access to a book they're using to teach, one of the local brokers. I got access to the book. And the book gives you general theory. It doesn't give you anything to do with practice, it gives you general theory. The intention of the general theory is number one, to give you surface level knowledge that gives you a false sense of security, false sense of confidence that you actually know how to trade. They make it so easy for you to understand the markets in the way they want you to understand the markets. They make it so easy for you to make a trade and to withdraw that you convince yourself that you know how to trade. So what do? You come and do what? Deposit money. Now, when you open an account, I want you to know this. When you log into, you go to Google, type XYZ brokers, for instance, put my name, my email, my phone number, my address, and open that account. They record that as a sale. So when I deposit money, they record that as a deposit. So whether you win or you lose, the brokerage is growing. I want you to understand that. And that's why I started by saying the broker is not here to be your friend. So these free lessons they are giving you, they are not meant to make you a trader. They're only meant to make you have the confidence of depositing your actual money. And when you deposit your money and come into the market, now people like us will take that money away from you because we know what we are doing. You don't. The other thing you'll notice with forex brokers, especially locally, The lessons they give you, they will put a cap and say, we will train you for at least 1 month. But the time 1 month is coming to run out, you will notice they start giving you pressure to deposit. I know they do this. It will take you, if I teach you how to trade, I tell people we will take 16 weeks. We'll do one lesson per week, we will take 16 weeks. 16 weeks is 4 months. 4 months is sufficient for you to understand the movements of the market. So I want you to imagine somebody is teaching you over 16 weeks, while somebody else is teaching you over a 1 month period. Naturally, Kenyans will go for the 1 month. Then you see the person teaching you over 16 weeks is charging you X dollars. The brokers are charging you $0. Naturally, you will go there. But within 1 year, you'll have lost so much of your capital, you will think that forex trading is a scam. And I think I mentioned this in the earlier video, but I didn't get to share with you. Now, which broker would I choose? I would choose only a broker that prioritizes customer service. And what do I mean about customer service? I'll only work with a broker or an account manager that is seeking to understand my needs first. Now, let me assume all of you on this platform are newbies. You know nothing, you just want to get started. I will only work with a forex broker and an account manager of that forex brokerage that will help you get the right knowledge. Remember, in the first video I talked about knowledge is power, but the right knowledge is freedom. So if I meet a broker who is willing to put me in contact with people who know the industry in and out to help me grow, those are the people I'll work with. And I have only seen 2 brokers that I can recommend who do very, very well. Number 1 is Windsor Brokers and number 2 is HFM Kenya. Why am I recommending these 2? I used to work with EGM and FX Pesa like brothers and sisters, so they are more or less the same. So remember I told you a broker is interested in what? Making money from you. They really don't care whether they succeed or not. Then they want to make money from you. So EGM, we had a very good relationship. And then one day they reviewed their pricing and they introduced a swap that is higher than the swap I'm used to being charged. So instead of being charged a fraction of that contract, I'm charged the full price of that swap. That meant they ate into my profits. So that's one of the reasons I walked away from FX Press and EGM. I can't even go back. Nobody can convince me to go back. Then I worked with Ingot Brokers, and this one I'm giving a testimony that I've experienced in the last 1 year. And if you open an account with Ingot, you have been advised to go ahead, but I wouldn't recommend Ingot. Why would I recommend Ingot? I am a swing trader, so I trade infrequently. I trade very few times in a week or in a month. So that means my account is very well protected compared to other accounts. And if you go to my website, these are the links. If you go to my website, you will see I have listed all those accounts. I have an account with Ingot, an account with HFM, an account with Windsor. BDC, I have not listed them because they are yet to get a license in Kenya. So what happened is that I logged into my backend one day and I saw that they had changed my trading conditions without my knowledge. What that means is that if I was going to go to the market and to make a trade, and if the trade didn't go the way I wanted it to go, I would have thought it's me who didn't know what I was doing, but they actually altered my trading conditions without my knowledge. Ideally, they should send you an email to tell you ABCD has changed. So I complained, of course, and they said you should have gotten an email. Saying you should have gotten an email and receiving an email are 2 different things. I never got an email. I complained, they said they're going to look into it, blah blah blah. 2-3 weeks later, I noticed they have changed my trading conditions again. Now this time I demanded to speak to the CEO or the supervisor of my account manager, the supervisor, the next senior person, and they said that the CEO was going to call me. 2 days later, and this is the only reason I'm giving you this story so you to understand why I prioritize customer service. 2 days later, the CEO never got to me, just to call me, but they said they have been trying to call me. So I'm looking at my phones, nobody has called me. Now I understand at this point, I think in terms of ethics and customer service, you're not a broker I want to work with. I call them and I remind them that you said your CEO will call me. So the CEO eventually calls me, and the first thing from his mouth is, why am I insisting that he talks to me? But remember, they're the ones who told me the CEO was going to call me. So I want you to imagine, at least I know what goes on in the industry, that I know I can talk to all these people. Imagine what would happen to you who has no idea what goes on in the industry. So we had a long phone call. Of course, they denied, they didn't do these things, and then eventually they said, we accept, we apologize, we do this. But I ask you, would you be comfortable working with such a person? For me, the answer is no. And from that time onwards, I have given them notice that I am moving away from them. I am simply waiting for my account and the orders in my account to close, and we shift now. I shifted to Windsor, HFM, and now BDC. So, ladies and gentlemen, if you happen to have an account with Ingo, I really wish you the best of luck, but I'm promising you, you are going to have a very bad service. So, if you want to link up with Windsor and HFM, you just reach out. I know the account managers who will work with you to grow you. So at this point, allow me to respond to the FAQs. Gertrude, I am assuming there's no question that was typed on the chat. Let me just see. Oh, check it, Dennis, you're asking which broker was that? It was Ingot Brokers. Ingot Brokers. I'll just, it's just there, Ingot Brokers. I would not recommend you work with them. If you choose to go ahead, I mean, you are free to decide. Let me go back to the FAQs. So this question was, which type of trading is sustainable? Which type of, okay, I combined two questions. Our first question was, which type of trading is sustainable? The next one was, which type of trading is sustainable for beginners? And I am biased towards swing trading. Swing trading is ideal. It's easy. It's easy in this sense. You don't have to be on the charts every day. Number two, swing trading will prioritize protecting your account over making money. Many people come into this industry wanting to make money, and they will not even last 3 months. They will lose all their money. Why? They will behave the way scalpers and day traders behave, and they lose a lot of money. When I have time, I'll actually log in and show you the Kenyans I have traded with, and I'll tell you this one is a swing trader, this one is a scalper, and you will see the results. You will actually see the results for yourselves. That's why I'm saying swing trading is recommended. And I want you to understand that. Be patient. The market is not going anywhere. Like, it's never ever going to go anywhere. The market will be here today, tomorrow, next week. When I have moved on from this world, the market will still be here and money will still be made. So you'd rather take time and practice swing trading. It's super easy. Are indicators good for analysis? I'll combine this question for indicators with also something called robots. So I'll start with indicators. Indicators only work if you know how to analyze the markets. Without them, let me use automation as an example. So we know Tesla and Google, these are two separate companies. They are both working on autonomous vehicles, a vehicle that will drive itself. Say all of us are drivers. For example, all of us are going to driving school. We know the rules of the road. We know you give way to the person on the left. When you approach a junction, you slow down and stop. We know the rules. And because you know the rules and you get the autonomous vehicle, when the vehicle makes a mistake, you will spot it. You will actually spot it. Compared to somebody else who does not know how to drive, then they buy the autonomous vehicle and say the vehicle should know where it's going and how to get there. If the vehicle makes a mistake and possibly is about to get into an accident, you will never know because you do not know how to drive. Same thing with trading. If you know how to analyze the charts and analyze the charts, make decisions without indicators, indicators only come to help you refine your decision. They only come to help you refine your decision. They cannot make decisions for you. And you will see indicators that are advertised as easy to use. It tells you when to buy, when to sell. But let me ask you, because it's telling you to sell, do you know why it's telling you to sell? Nobody knows. Do you know why it's telling you to buy? Nobody knows. No amount of automation is going to beat human intuition. That much I'm going to defend. Even to my grave, I will defend it. No amount of automation will beat human intuition. Because at some point, your gut feeling and the knowledge and the experience will tell you, as much as this thing is saying it's a buy or a sell, I don't think this is a buy or a sell. So indicators, they only work if you know how to look at markets. The other reason why we go for indicators number two is that because we think it's easy. The first time I checked, I used an indicator, and my account didn't last 1 week. I remember this was back in 2014. I put $300. That time I was working with a broker, international broker called Alpari. Made my first $10. I was very happy. Like, I can do this thing. And I was using an indicator called Relative Strength Index. You can check it out. I don't recommend it, but you can check it out. So Relative Strength Index, if the market is overbought, it will tell you now sell. The market is up here, start selling. The market is oversold, it will tell you the market is down here, start buying. Very simple. I use it. So I made $10 today. The next day, I got into trading in the morning. By lunchtime, I had lost $170. By the end of that day, I had lost $300. So in short, that account survived 2 days because I was using an indicator. Then I moved from RSI. I took another indicator called stochastic, works more or less the same. These are very simple indicators. My accounts didn't survive, so I had to learn how to analyze markets. So that when the indicator tells you it's a buy or it's a sell, it is confirming what you're seeing or it's disagreeing with what you're seeing, but it's not telling you what to do. Robots. Robots are very interesting, ladies and gentlemen. And I'm sure if you go to social media, especially TikTok, you see videos of guys saying this robot, that robot, this indicator, that indicator. The cheapest robot that actually works will cost you between $5,000 to $10,000. The cheapest robot that actually works will cost you $5,000 to $10,000. That is where you're starting. And that robot requires a capital of at least $10,000 to start trading, at least. So say you have the 5,000 and you have the 10,000, you have 15,000 USD. That would be 15 by 140. That would be about, let's say 20, let me say 20 million. Ladies and gentlemen, you have 20 million, you can afford to pay a school to learn instead of using the robot. And robots have blown so many accounts. Why have they blown accounts? Remember, I told you, no amount of automation will beat intuition. Intuition is you making the decision with all the information and saying, I don't think this is right. Robots will just make trades with the information they are seeing. And the information they are seeing is not so different from what you're seeing. You have just convinced yourself that I would rather use a robot instead of actually learning the markets. So that is something I have noted. So I wouldn't recommend a robot. I wouldn't recommend an indicator. Just learn. You will actually make sense to you in the end. So somebody asked what entry strategies are the most effective. I think my ring light has just gone out. Okay, let's come back again. Sorry for that. Somebody asked what entry strategies are the most effective. So this is an advanced question. And the entry strategies will depend on the type of trader you are. Remember I said we have scalpers, we have day traders, we have swing traders, we have position traders. It will vary. So this one you'd rather, once you start learning, that person who is teaching you will teach you the most effective entry strategy. So at this point, you'll find that a tutor will actually be using an indicator to tell them or to confirm for them this is an entry strategy. Personally, I don't use them, but that answer you can only get this right answer depending on the person who teaches you. I think those were the Q&As that we had today. Gertrude, I don't know if there's any other additional question I can respond to.
Just a minute. In the meantime, if you have any questions, feel free to ask our trainer of the day and we will be happy to answer your questions. Feel free to ask. The comment section is open. I believe we don't have any questions on the sign up form. In the meantime, feel free to ask any questions that you have. The time is now. Okay, if we don't have any questions, that was such a wonderful session. We have gone through so many things, the types of traders, what to consider when choosing a broker, tactics that are being used by brokers to influence us. And one thing that has stood out for me the most was that customer service is key. And thank you so much, Mr. Gitau, for sharing your experience with one of the brokers right here. I believe most new traders don't get to have such honesty when they are getting into the market. Therefore, thank you so much for sharing that.
You're welcome.
Okay, we have also looked at whether indicators, we should be using indicators, and the message was indicators only work if you know how to analyze. That has also stood out for me so much, because as you've shared on TikTok, we see so many people posting screenshots encouraging us to buy these bots, but as we've had, they only work if you know how to analyze. I believe we can end it there, unless one of us in the audience has something to share with our mentor, our trainer of the day. This is your time. You can say something, whether you are learning, because I know I am, and I'm taking so many notes. Yeah, the time is now. You can say something.
I have learned one or two things, and I'm hoping to apply the knowledge. Though I haven't started trading, I'm in a space where I'm trying to gather information around it, and yeah, I hope to join your. You say you have to pay for it in order to get the best knowledge. So yeah.
You're welcome. You're welcome, Cindy.
Awesome. I believe, unless our speaker of the day has any last words for us, Mr. Gital.
So thank you for the opportunity. And I think, as we mentioned in the first web series, this is for awareness creation. And it's possible to succeed in this industry. I just want to make it clear it's possible to succeed in this industry, but you have to be willing. You have to be willing to pay the price, not just the money, but the time, the consistency, the dedication. You have to be willing. If you take time to study about Nigerian and South African traders, they're doing very, very well on the global scene. One of the best traders, I think, in Africa right now, his name is Dapo Willis, and he has been poached by a whole country. Qatar has actually poached him to trade for them, the National Sovereign Wealth Fund. So that is a human being who is practicing this skill, and he's creating wealth for a whole other country. So it's something that we if we learn and we are patient, we can get into this in the long term. But generally, I am enjoying this space that we are having this conversation, and I hope that the audience gets to use this information to make the right decision. Thank you, Catherine.
Welcome, and thank you for being here and being willing to share your knowledge, your experience. Not many people are willing to do so. We appreciate it, and I believe we can end it there, unless we have any last words. I believe we can end it there. Thank you so much for joining us tonight. We'll be sharing the recording the same way we did for last week through the email. And yeah, have a great night, everybody. Bye bye now.
Bye bye. Thank you.
Good night.
Good night.
Bye bye.